Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. And today we're going to have a live discussion of current market conditions, trading psychology, any questions you might have about Tradespoon or Yellow Tunnel subscriptions, and how to trade in current market conditions, trading plan and trading psychology. The goal for today is to answer any questions you might have. This is my brief bio for those of you who are new. If this is your first live event, do me a favor, just type in first inside of the questions. I was Executive Vice President, Head of Technology at Options Express from 1999 through 2007. Options Express was an online broker-dealer acquired by Charles Schwab in 2011. At some point, the company was worth over $2 billion. I'm very proud of that experience. Since I left Options Express, I work as a consultant and investor in several financial technology firms here in Chicago, Groupon, several hedge funds. Started Tradespoon in 2012, started Yellow Tunnel in 2019. I want to take this opportunity to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing that for over 15 years. Mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistics and technology. Disclosures: trading stock and options involve risk and are not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade picks will be profitable or will equal past performance. And you can see the relationship between Tradespoon and trading block on the bottom of your screen. Right, before we talk about trading system, let's talk about current market conditions. Spiders. Looking at the daily chart, definitely losing momentum. We've had pretty volatile sessions during summer as expected. Bull's case is that unemployment numbers are better than expected. May retail numbers are better than expected. Manufacturing PMI, ISM are better than expected. We are approaching earnings season. So far, has been a positive surprise from companies reported in the past. So that's the bull case, and that's why we're trusting 318, 319 level. But you can see the rally is losing steam. The bear's case is rise of coronavirus cases, partial closures in Florida, Texas, and California. That usually there is a realization phase after the market panic, then kind of a hope of V-shaped recovery. Usually there is a correction in the market, and that there is no V-shaped economic recovery, and United Airlines and several companies either declaring bankruptcies or declaring that they will either let go employees or furlough employees in the near future. So that's the bear case. My personal opinion in the market are driven by China. FXI had a strong breakout from the recent range, actually broke the year-to-date high, trading. So that's the bull's case. Treasury continued to go higher, retesting this overhead resistance. That's the bear case. That's why I think short term, I think the market is going to pull back. As long as treasuries prices are elevated, continue to go higher. Dollar continue to rebound. I think dollar will retest 98 level. So I think that's the short term pressure for the bear, for the bulls. And VIX is still historically elevated level, around 30 level. Also value stocks. Value stocks already had from 110 to 98, about 12 to 15% correction. So value stocks, 12 to 15% correction. Today, value stocks are outperforming the market. Technology sold off. So that's some slightly change in my opinion because of China and the fact that value stocks sold off 15% and spiders did not, is that I still think there's a bear case to retest 296 level. We've seen it past couple of days, retesting 310 level, right? So the 50% retracement between 298 and 318, that's roughly 308, right? That's a 50% retracement that has been support. But I've talked about 307, 308 level. We've tested 310 level. I think if bears will retest, I think next week, if they break through the 307 level, then we will retest 299, 296, 293 level on the S&P. But at this point, because of China and value already reaching oversold level, I think market will not retest 280. I will be surprised if market actually gets back to the 50% retracement between 52-week high and 52-week low. So that's my view on the market, short-term and long-term. For active traders or aggressive power traders, if you trade day trading, I would look at the stock forecast toolbox. Today, the predicted low is 312.81, overhead resistance and 317. We've seen spiders today right at 312.50, right? Earlier today, 312.50. So I would give model A or B. Model is doing, I think, pretty good job as long as there's no major news that will take my market out of equilibrium, as long as the VIX is staying constant, right? Or trading in a range. That's been discussion for the past couple years. When is the model accurate? When is the model inaccurate? Model is inaccurate when VIX goes from 20 to 80, right? And not so much is that it's inaccurate. The range, I probably misspoke. The range defined by the predictions will expand as VIX continues to rise. But when you see VIX for the past few months, right, I would say from April, end of March, April, May, June, July, it's trading in the range 47 to 23. So as long as VIX is trading in some kind of a range, then the model is doing a good job giving you information in terms of for any given day when you're ready to enter a position, at what point you will pay too much for the position, for the stock, or at what point you will pay a fair price. If you're buying a stock at 317, I think you're overpaying, right? You're not paying a fair market value. You're overpaying for the stock in general. If you buy at 312.81, you are buying a stock on a discount. So that's been a common question. What do you mean by overbought, oversold? I think this is just going back to support and resistance level and figuring out at any given point, what is the fair market value for the stock or for the stock market that you're buying. So if you today bought at 312.81, you're overpaying. If you bought it at 317, oversold. So today, actually, part of the active trader. So some of you I know are active traders. Active trader, we're providing 3 bullish, 3 bearish trading ideas. All right, so ATVI. So I actually did trade ATVI. The idea was to buy at $80.64, the support, or $79.35. Since the market did sell off in the morning, ATVI hit 79.60, right? 79.60, exactly what the model predicted to be the low for the day, plus minus 35 cents. So if you do see pre-market futures are down, right? We were as low as 311 on the futures. Let's see, stock forecast toolbox. If you look at the futures, we were as low as 311. So if you see pre-market futures were as low as 311, right, then potentially waiting for predicted low makes sense. That's strategy A. If you see S&P futures are down, then you buy at predicted low, right? ATVI gapped down at the open, right? So I waited for the predicted low, and then as soon as the predicted low, I would enter the trade. So if elite subscription for today, you can actually see all the trade. This is the earnings strategy, right? Where I sold the 39.36 put spread. I closed it today, and ATVI. So I sold 80 put for 42 cents, closed it before the live trading room, before the strategy roundtable for 25 cents. And from 9.50 to 10.30, ATVI did, from 9.50 to 10.30, ATVI did move from roughly $80 to $80.80. So almost 1% move to the upside. So that's a perfect example how you would look at in any stocks that you're trading, how you would look at the support, how you would look at the resistance, right? Fair market value versus overpaying for the stock, and the trend. You can see the trend for today is slightly positive, almost neutral. Trend for the next 10 days, electronic arts, ATVIs, stay-at-home stocks are continue to outperform the market. So that's how you use either active trader, or if you're a yellow tunnel subscriber and you are more aggressive, right? You're looking for more trade ideas short term. You want to have more choices than you have today. Was actually 4: Verizon, FBHC, Cisco, ATVI. Based on market condition, could be up to 10 stocks. You can also use this to kind of gauge how bullish the market is. If I only show 4 stocks, an active trader shows 3 stocks, then market condition is probably getting to a neutral stance or slightly negative. If it's 0 bullish stocks, then it's oversold. If it's 1 or 2 stocks, it's kind of approaching this oversold condition. If you see 10, then the market is in strong uptrend, because it means that the model identifies different stocks in different industries, right? If you see technology, Verizon, Cisco, and TVI, you see a narrow leadership. If you start seeing JP Morgan and Caterpillar, then you see there is a across asset classes rally. So yellow aggressive power trader can give you the scope and the breadth of the rally or current market conditions. So that's the that's the stock forecast toolbox. 312, 317. Important again for the bulls to hold on to the 310, 312 level in pre-market. That's what we've reached yesterday and today. So that's probably the line in the sand. From the long-term perspective, seasonal chart kind of confirms my change in opinion. 4 to 4 higher, 60% correlation. You know, still waiting for the short pullback that usually happens in seasonality chart, but again, August or September reaching year-to-date high, right? So, and I think that correlation will continue. So I think spiders will retest 52-week high sooner than I anticipated. I thought that we're going to wait for elections, but I think we will retest 340. Market will retest 340 prior to elections. Probably not during summer. I still think this is a strong overhead resistance, but market will probably retest 340, similar to and follow the FXI. Probably as soon as the number of coronavirus cases drop in Florida and southern states, and the earnings season, right? Earnings season is next week. A lot of people will pay attention to the earnings, and it will probably be a positive surprise over S&P 500 stocks. All right, so let me know if you have any questions. Joseph Buck, trader. Bob James, good morning. Joseph, welcome. This is the first event. Trinath, welcome. A lot of new subscribers. Welcome aboard. All right, Ricardo, thank you. Shaniqua, welcome. Refreshed. Yeah, so good question, Shaniqua. In terms of refresh, we do have time. So it says here, updated at 8 p.m. Central. So 10-day forecast is updated by 8 p.m. Central. So that's how you know when the model is updated, which is very important. For seasonal chart, it says here that it's updated once a week on Sunday and 6 p.m. Central. And again, a lot of people says, Vlad, why don't you update this, every 5 minutes or every day? It depends what the model intends to do. This model, the seasonal chart, intends to update information for the next week. So all of this information stays static. So if there is an event, let's say market drops today, then this information still stays the same to show you whether the market is oversold or overbought, right? The model predicted 307 to be last Sunday to be between 307 and 297. We're actually staying above 307. So you know whether the market is overbought or oversold. So these predictions will stay the same throughout the week. And then Sunday they will be updated because the intention of this model is to provide the view on the market for the next 50 days, right? If four independent predictions show you higher momentum, then it basically means that the momentum from last Sunday for the next 50 days that bulls are in control. Right, bulls are in control. You can expect potentially short-term corrections, but the long-term trend is continue to go higher. So, Shaniqua, thank you for the questions. Faust, stop loss options, multiple stock prices change by delta to get an option price change. Faust, I'm not sure where you got that statement. Stop loss options, multiple stock price change by delta to get option price change. I'm not sure. So in general, when I sell option, right? So so let's say ATVI, right? I usually look for 0.5% profit. So going back to the trading plan, I'm looking for 0.5% profit. So if the stock is trading at $80, then if I sell a put, I know a lot of people using a weekly trader and active trader to sell put spread. So in my case, for weekly trader and months in active trader, if I'm holding position for 1 or 2 days, I'm looking for 0.5% price fluctuation. So I would sell the option for 42 cents, right? So $80 cents, I would sell option for 42 cents. That's usually delta 30 and 40, right? Delta 30 and 40. The stop price, in my case, I don't put a stop price on the option, or I put a limit order at what price I want to close the stock option. But then I am looking for the stop level, the way I calculate for active trader and weekly trader, I look at $80. I'm buying $80 stock, right? And I'm receiving credit for 42 cents. So my break even point is roughly $79.50. So I'm buying stock for $79.50. And then I'm using 1% stop loss. So if the ATVI drops below 79.50 by 80 cents, right? So that would be what, 78.70. So if ATVI drops to 78.70, where's ATVI? If ATVI will drop today to 78.70, that's my stop level, right? That would be my stop level because I'm looking for 0.5% gain or 1% stop loss, right? That's my that's the trading plan. So Faust, hopefully that answers the question. If not, do me a favor, open up a support ticket, and we will try to answer your question. James, yes, very common question in terms of the question was, well, what if the price never reached that level for active trader or active trader option? So for active trader option, you can actually see, let's say, yellow tunnel, right? We change format to address this question. So when I buy ATVI, right? If I'm buying ATVI option, long dated leap, or if I'm buying it option, I'm using the buy signal of the stock. So for options, if I'm buying options, whether it's weekly option or a leap or a monthly option, the idea is we're trying to calculate the price of the option, but we're not taking into account extrinsic value. Or if the option drops, if the stock drops in the morning, there is a gap, and it might not reach 79.35, right? ATVI, the low for ATVI was 79.60, right? This is a model. It tries to predict the price, but it's never going to be, correct. I mean, sometimes it's correct within a penny, but usually there is some kind of standard deviation of error, right? So here we're trying to say that, it's within, 30, 40 cents. So let me see. And if you look in Active Trader, it basically tells you standard deviation plus minus 35 cents. So within 35 cents. So when I tried to just trade stock and option, right? Whether it's a stock and option, the entry and exit price is determined by option price, right? We're trying to calculate here that it's 85 cents for the call, 78.85 plus 85. This is the 79.35, right? So the predicted low is 79.35, right? This is where we predicted for ATVI. But the option 78.5 call that just expires today will not be exactly 85 cents, right? There's usually, especially when the stock drops in the morning, volatility expands and there's extrinsic value. So you might have to pay $1 or $1.10. So the way I trade, I don't look at the price of the option, right? I make a decision based on the price of the stock. So if it reaches 79.35, plus minus 35 cents, right, 0.5%, or, I would look for the reason I entered at this level because I was waiting for the price of the stock to clear the last candlestick, right? So it came to 79.60. I was waiting for 79.35. The next candle came and closed right or above the previous candlestick. So to me, that was a single signal to go long. And that is a very common question. A lot of people ask, Vlad, what if option is never 85 cents? Quite often, especially when VIX is at 30, right? When VIX is at 10, you usually model you would get into the entry price more often than not. When VIX is at 30, you always have these morning gaps. Not always, but quite often you have morning gap. So then you have to make a decision whether the price, it's a fair price, right? Are you buying at the discount or are you buying or are you overpaying for the stock? So this gives you that if you buy at predicted low, right, or within that range, you are buying at the discount, right? When you look at these, when you put your stocks in the list, like Cisco, if Cisco reaches 46.22 or it reached 45.75, you are buying at the discount, right? So Cisco today, 46.51, right? It was as low as 46.24. So Cisco at 46.24, you're buying at the discount. You're buying basically at the prior low, and these are your trigger points. It's either prior low or a buy, right? And same thing, you can wait for the predicted low, 45.75. It might or might not reach that level today. The other thing, you apply regular technical analysis. You look at the prior low. Prior low is 46.22. You wait for the price to clear the previous candlestick. So at this point, it makes sense to enter the price. So James, very common question, and hopefully that answer your question. Jane, by what time do I expect Spider's 30 tests by? I think it will happen prior to elections. So one trigger would be, well, this earnings season, right? Earnings season starts in the middle of July. We'll have more clarity by August. If coronavirus cases drop, and I know they will drop, right? I think it's just a matter of time. Will it take 4 weeks or will it take 8 weeks? That I don't know. I think it's going to take 4 weeks, but I think probably by October. I think by October we'll reach 340. We could have, but if the earnings is a positive surprise and the coronavirus drop cases, then it can happen as early as August, right? By end of August as earnings season unfold, and if earnings, I think earnings will have positive surprise and coronavirus cases drop. We'll have more positive news about the treatment from Gilead, like we had today. The number, the average time in ICU continues to drop. Once people are admitted to ICU because of the better treatment plan for the patients, then potentially it will happen, even prior to October. In the next Yeah, probably September, October. QQQ will correct. QQQ look like today that it's pulling back, right? QQQ was down, but it's still in uptrend. And the positive news is that I see value starts outperforming. The reason market was pulling back, but couldn't break through this resistance is because of the value stocks. So I think it's too early. I would wait for a couple of days. But if this is the low for the value stocks, 96, next week if we don't break, I think if in the next 2 weeks QQQ, if VTV doesn't break 96 or 92, right, it potentially can pull to 92, right? But if the which is 5%, that could be in 1 or 2 days. But if in the next week VTV trades above this or this level, I think that will be the start of the rebound. So I think QQQ, to answer your question, Bob, I think QQQ will pull, but as long if all asset classes sell off, then I would say spiders will get to 93. But if QQQ goes down, but value stocks go up, then then bulls are in control. But I do think QQQ is overbought, right? By any technical analysis, this is not a normal price action, right? At some point, QQQ needs to at least pull back to the 50-day moving average, right? So I think QQQ will probably pull back to 240 in the next 2 weeks. Short term, I'm bearish. I think QQQ, like today and yesterday, we had this volatility. I think QQQ will pull back to 240 level. Threenet, I would not use seasonal chart for short. The question for short-term prediction, should you use seasonal chart? Seasonal chart, you want to see long-term trend, right? Because you look at this chart and it looks bullish, right? But I'm bearish, and a lot of people say, well, it doesn't make sense. Why are you bearish if the seasonal chart is bullish? Because it's analyze a different time frame, right? I could be bullish going into the end of the year, but I could be bearish, for the next 3 weeks. So that's why I would not use seasonal chart for day trade. I would not use seasonal chart, if you're holding position for a couple days, right? If you're doing the day trading or short-term trading, I think that's what Stock Forecast Toolbox has been created for. It's the 10-day predictions, and basically showing you, at least as of right now, current market trend is neutral, right? Yellow. The model basically says, well, it's a flip of a coin, whether we're going to go to 317 or 312. But at least for now, the next 10 days, the trend is still positive. Bob, how would I play overbought? I would not chase technology. You can see I don't, I have few, I start adding into Robo Investor. Into Robo Investor, I added Fortinet, right? I added Workday, right? Because these are long-term trades, right? These are stock trades, and having 5%, 10% of your portfolio would make sense. Because I still think technology will lead the market, right? Even though if it pulls back, so my strategy would be to wait for that pullback. If spiders drop to 293, 296, I think that would be an excellent entry point, especially if you're a long-term investor or you're trading stocks. I think if your time horizon is end of the year, a few months, then entering at this level would be a good entry point. But at this point, I would not chase the market. I don't think it makes sense to pile into this trend. I think it's overbought and it will pull back. James, thank you. Faust, I'm still not sure what the daily screen is, or Maybe if you can take a screenshot and just put an arrow and open up a support ticket, then I'll probably be able to understand. James, thank you. James, 2 price ranges. Are you talking about strategy A or strategy B price range? Strategy A is basically I'm using if I see spiders are down by 0.5%, then I would say I'm using predicted low. Strategy B, if I see market is rally or up, then I would just use previous close price. Right, so that's the 2 different prices, strategy A and strategy B. Model runs on at night, right? It makes prediction for the next day, and depends what happens in the European session and Asian session. Market will open at different price point. You know, I already, as I said, before market open, I already can look at the futures and see futures were weak, right? We retested the lows at 311, 310, yeah. So I know futures are weak, sold off, so it makes sense to be patient and wait. Bob, yeah, whether you buy and put spread on QQQ, I bought a put spread on spiders. You know, it's the same strategy. You know, if spiders pull back to 293, QQQ will pull back, right? You know, between Microsoft, Apple, Amazon, and that's 20% of S&P, right? There's 5 stocks that are 20% of S&P. So if QQQ pulls back, then spiders will pull back also, and vice versa. Genevieve, does the amount of liquidity the government injects into the economy counteracts the fears due to the coronavirus, too much debt? That is primary case behind the bulls, right? Behind the bulls, it's not so much as unemployment. I mean, obviously the initial claim, the continued drop in initial claims and unemployment numbers, it's still a good bull, one of the bull cases, a V-shaped economic recovery, but ultimately there's still unknowns, right? United Airlines will let go employees, Delta Airlines will let go employees, a lot of retail stores are being closed, letting go employees. So that I would not say that, it's still debatable whether it's a V-shaped economic recovery or not. We still need more data, especially with this rise of coronavirus and partial shutdowns that definitely not helping people. But hopefully in July, when Congress gets back and they'll pass next stimulus package, one of the incentives would be for people to go back to work, right? I think that will help. Right now, if they're going to extend, right now, majority of the people on unemployment making more money than they did prior to coronavirus. Not majority, but a lot of people, right? I'm not going to say majority, but a lot of people are making more money than they did with the, because they're getting the unemployment check. And I think if Congress passes the law to actually incentivize people to go back to work, receive another paycheck to get back to work, and number of coronavirus drop, and southern states will reopen their economy, like New York and Illinois, then that's the bull. But that's not the primary bull case. The primary bull case is liquidity, because the government will do anything in their power, not just in the United States, in Asia and in Europe, to provide liquidity to the market. And the general consensus, you don't trade against the government, right? You don't, I've read somewhere in the news that this is the Chinese government is actually buying, some of these stocks, right? So you don't trade, if China is going to continue to buy Alibaba and JD.com, you probably don't want to short these stocks, right? That will be very difficult. You might want to wait for the pullback to enter the trade because it's overbought, but you don't want to short, FXI, because you're basically going to trade against the government. So liquidity, I think, is the primary factor, right? That's the primary bull case, and it's been, the end of the sell-off in the market was when government start buying assets, right? Treasury dollars, that's the end of the sell-off. If they didn't step in, market would continue to go down, and the reverse is true. Divan, sorry if I mispronounce your name, but would I recommend long leaps calls for stock in Robo Investor? That is a common question. You can definitely buy long leaps on Robo Investor stocks, right? You know, what did I do? Fortinet, or yeah, Fortinet. So you can buy leap on Fortinet, but you would still have to. I would encourage to do, you know, if you buy a leap, let's say January 2021, still sell out of the money options for front months, maybe 30, 40, you know, 45 days, maybe 50 days till expiration, 30 days till expiration, because the problem with the leap that it's the ice cube, right? It's going to decay in the time, you know, it's going to decay, time premium will decay. Obviously, Fortinet makes it just, you know, next leg up after the earnings, you will benefit from this. But if Fortinet is going to trade in this range, right, then your leap will deteriorate in price. So to recoup some of the time premium, usually you can do calendar spread, right? And I would just sell out of the money options. Carmen, yeah, I mean, you know, if you believe, you know, that the market is going to continue to go higher by December, then you buy leap, call spreads, verticals. You can buy leap and sell front months, but you execute bullish strategy, any bullish strategy, stocks, cover calls, vertical spreads. You know, single options. The problem with single options is that the time decay, right? I don't, you know, nobody knows whether the 340 will be retested, you know, in the next 3 weeks, in the next 3 months, or maybe in 2021, right? Nobody, I can't, this is just my opinion, but that doesn't have to be. So you hedge your opinion by, you know, doing either verticals or cover calls, but you're trying to harvest the premium by selling these out of the money options, which is a good strategy right now because VIX is elevated, right? So you buy, you know, if you buy leaps, you can sell out of the money options and you get a lot of premium in those options. James, Faust, Carmen, thank you. Divan, thank you. All right, so question on yellow tunnel. Two paid services, again, more choices for day trade. If you trade in, you know, you hold in position for a couple of days, we have aggressive power trader. If you hold in for a couple of weeks, weekly power trader. The difference between yellow tunnel and Tradespoon services is this is more giving you more choices basically. If active trader and weekly trader gives you 3 bullish ideas, 3 bearish idea, weekly power and aggressive power trader will give you up to 10. Right? Usually I never see more than 10, but up to 10 stocks. So that's the difference. But more importantly, you know, yellow tunnel is built on the idea of trading psychology, right? So if you are on your journey of trading, right, depending where you are on your journey, depending where you are on your retirement path, you might think trading psychology is important or you might not. You know, there are different opinions. My opinion is that trading psychology is extremely important. The way you handle your emotions, the way you know, if you believe that your emotions will influence your trading, you know, your cognitive state, trading decision, then this is why yellow tunnel was created. If you believe that your emotions will not make your trading decision, then that's probably not something you want to spend your time. If you do believe that your EQ and your IQ are interdependent, which I do, then we have blog, webinar, and monthly event where I'm inviting Dr. Maneker, who's a trading psychologist and actually a professional trader, one-on-one coach. And we talk, you know, we have few of his blogs that he published and few of the webinars. So I encourage you to, even if you're not using the services, the trading psychology content is free, right? And it's, if you ever been in a live trading room environment, you know, this is what I always talk about is you have to have a trading plan, right? This is all nice. You know, models are great, but you know, if the market drops to 293, usually you get overwhelmed with fear that this is not a V-shaped recovery and you have a prolonged recession and market is going to collapse, right? So you have a fear of prolonged recession. If the market rallies, you have a fear of missing out, right? You constantly pull between these two different fears. So how do you handle them? Very important is to concentrate. One of the key points in the yellow tunnel and the discussion is that you have to concentrate on things that you can't control. And in the live trading room environment, I always talk about two things. One is the trading plan. You have to have a trading plan. And trading plan has 4 pillars of successful trading, right? This is what I would write is our 4 pillars of success. So here it is, PPL, almost like PPP program. PPPL. I have to find a good acronym for this. But step 1, in any trading plan, you should decide for yourself how much cash you should have in your account. Trade small, trade often, especially during summer when the market is volatile, when the VIX is at 30, 40 level. The size of the position is the most important, and cash, right? I mean, you can have a lot of small positions, but if you're buying on the margin, it's also a problem. So on average, 30% of your portfolio should be in cash. I would say that's average. You know, if you look at the Fidelity or if you look at UBS or wealth managers, you know, average portfolio fluctuates between 60% equity, 40% bonds, right? So depending on where you're on your retirement path, you know, it could be higher, it could be lower. I would say 30% of the portfolio should be, you know, cash, bonds, you know, something that is safe, CDs. But 30% of the portfolio should be in cash. That allows you to, if the market does pull back to 293, or if the number of coronavirus gets worse, right? This is my opinion, but it's just an opinion, and I'm trading based on my opinion, but that doesn't mean I'm going to be correct, right? Nobody knows whether this will happen or not. But in the bear case, if there's a jump in coronavirus cases, let's say to reach the plateau in Florida, instead of 4 weeks, it's going to take 8 weeks, right? And we are end of August or in September, and there is still, you know, 10 p.m. curfew and partial lockdowns or full lockdown. Let's say they're going to close restaurants. You know, right now they close indoor seating in Miami. They might close outdoor seating. I don't know. So that will cause the market to drop below 293 level, right? So then you need to have cash, right? You need to have cash that you can deploy if the market, you know, have these, you know, 1 or 2 standard deviation moves. So then 30% of your portfolio should be in cash. That's rule number 1. Rule number 2 is, again, trade small, trade often, and always calculate your portfolio drawdown. Portfolio drawdown just tells you how many positions you have and what is the maximum loss per position. So if you have 10 positions and 2.5% of your portfolio is your risk, right? Whether you trade in stock or you trade in options, right? Then 10 multiplied by 2.5, that's 25%. That's my portfolio drawdown. I think that's aggressive, right? That means you probably been trading for a few years. You're comfortable with the risk. At least you understand the risk that if, let's say, spiders are dropped to 80 or to 70, you understand that your portfolio will go down by 25%. As long as you understand that and you can calculate that, then, you know, that's fine. I think it's too aggressive. So the way to hedge it, out of those 10 positions, what I usually do, some of them I buy Spider's put spread, right, or sell Spider's call spread, because I know that's inversely correlated. Or an example of Pepsi, I have Condor or Butterfly or cover calls to make sure that, you know, 25% is aggressive. I think 10 to 15, if you start trading, 10 to 15% would be more appropriate. So to me, that is the most important trade, because if let's say I expect 293, but the market drops it to 280, you don't want to feel, you know, in live trading room environment, I always talk about future rehearsal exercises, right? You should not trade based on one scenario, right? I think that's probably the most common mistake, right? Let's say you only know two scenarios, right? You prepared for the market to be at 324, and you prepared for the market to be to 297, right? And you structure your portfolio based on that case. You should always consider there is still a significant probability, I don't know what it is, maybe 20%, that we will retest 280, right? Nobody can guarantee you that the market cannot be at 280, right? And same thing, I think it will reach 340 in October, but it could be there, in the next 2 weeks. JP Morgan, Citigroup announced earnings, Caterpillar and Microsoft will announce earnings in the next 30 days. And, despite the partial lockdowns, the corporate, outside of certain sectors, technology, industrials, banks, energy, since oil is recovering, if the Halliburtons of the world and Chevrons of the world will have better than expected earnings, then we'll be at 340. So I would go through the forward rehearsal exercises to make sure that at 340 you will not panic and sell all of your positions, right? Because you were too short the market. And if the market reaches 280, you don't panic, right? You want to go, what I usually do, this fear of future regret. Dr. Maneker always talks about not fear of missing out, but fear of future regret. If market drops to 280 and I have zero cash and I get on a margin call by my broker and and broker will force me to liquidate my position, I know I will feel I would negative emotions, right? And don't know what those words are, but negative emotions, right? So fear of future regret. I will regret not having cash if market reaches 280. Same thing if I am overly bearish, if half of my positions are bearish put spread and market all of a sudden is at 340 and I lost 25% of my portfolio, then I will have a fear of future regret. So that's how I determine if I'm overexposed the market on one side or the other. So always go through these rehearsal exercises. These are outliers, right? It is a low probability event that market will be at 340 in the next 2 to 3 weeks, right? You can always look at implied volatility and see it, but I would say maybe if, we can actually see it. Research probability calculator, right? So 76% probability in the next 50 days will be at 304 and 325, right? So to retest spiders at 340, we're talking about, I don't know, 12% probability, right? And you can look at the implied options data, but roughly, it is an outsized move, but if it does happen, you don't want to panic, right? And same thing on, if market reaches 293, as of right now, based on historical and implied volatility, it would be, beyond one standard deviation move, right? We're talking about 2 standard deviation move to reach 245. So, but it doesn't mean it cannot happen. It doesn't mean that market cannot drop to 280 to 70. It's a pretty low probability event, but it can happen. So you should always consider them, and that will enforce you to not overtrade, right? And always have a cash. If the market reaches to 50 to 70, and you think market isn't, we're in a bull market, which I think, then you buy in stock market at a discount. So you should be ready for these events. Yeah, so let's talk. So what do we have? What do we have? What are the different portfolios we have? So in Tradespoon, we have obviously free education section. That's part 1. So if you're looking for how to learn trade stock options, how to place trades, we have a free section. The next one is trading room and portfolio, right? This is a section where if you want to watch how we trade, this is the section we have. So we already briefly went over Elite Trading Circle. Elite Trading Circles, Elite subscribers have access to live trading room environment. Morning bell, closing bell, they see all the recordings, morning bell and closing bell. They have access to trader log, right? If you want to see all of the trades for today, if you want to see all of the trades for yesterday, if you want to see, what did I do with, I don't know, Square, right? Did I do any trades in Square? You can go in, say Square 90 days, and you can actually see if I have any open positions or at what price did I buy stock option, what price did I close option. And you get SMS alerts every time I trade. So that's a lead trading circle. You basically have ability to participate in a live environment, but sometimes I close trades outside of the environment, right? Like WBA today, right? Right. So I did not lead the live trading room, but I did trade WBA because the market moved. So I closed the, I changed the price from 10 cents to 20 cents, right? So that's an example where you have access, live access 24/7, basically, to my portfolio. If you're not if you don't have time to day trade, or you don't have time to look at the screen, hour in. Usually I trade the first hour and the last hour, right? That's those 2 hours where majority of the trades occur. So if you don't have time for that, then we do offer premium portfolio and Robo Investor portfolio. Premium portfolio, the difference in premium portfolio, I trade using options. So again, you get, this is example of CRM. So you have a pick on July 6th, CRM, I trade using option spreads, right? I buy 175, 185 call. We give you a choice, stock or an option trade. You can see whether this position was filled, what was the debit price. Again, you get a video, you get email and SMS message every time I would enter the trade or exit the trade. And you also get evening video, which I really like, especially if you're new to trading or if you just want to learn, why did I decide to buy CRM? What was the thought process? So you do get in a video along with that. So, and you have all the historical trades, so you can see all the trades and their performance. So that's premium portfolio. Robo Investor portfolio, similar to premium portfolio, right? It's similar to premium portfolio, but you get email and SMS message every time a trade. We have newsletters every 2 weeks. You get a newsletter with 2 trades, right? And the reason why we get into those 2 positions, but I hold stock position in my portfolio. So premium, it's 4 trades a month. Robo Investor, it's 4 trades a month. In both cases, in both portfolios, you get 4 trade ideas a month, and you can trade stock or options. Robo Investor, since I trade stocks, I have more positions, right? I can have anywhere up to 20 positions at some point. Right now it's a little bit less. It was as low as 10 based on the market condition, but I have more positions because I trade stock. I put less than 5% of my portfolio into a trade, and if I don't have to be correct on time, right? Sometimes I hold these positions for literally a year. More often than not, it's a couple of months, but sometimes I hold them for a year. Like an example of VIX, literally held down to VXX for a year. Because I know at some point VXX will, there'll be some event that will cause volatility to spike. So you buy VXX, obviously I was wrong on timing, but as long as it eventually goes up, then, and I still confident in that strategy, then I hold the position. So that's Robo Investor. The premium, I usually have 4 to 5 positions, because I not only have to be correct on direction, but also on time, right? And it's very hard to time the market. Usually you can be correct on the direction, but you're off by a week or 2 weeks. I think market will reach 293. I thought this would happen actually by now, but maybe it will reach in 2 weeks, or maybe it will never reach 293. But that's the point of the 2 portfolios. So you have live portfolio, Robo Investor, Premium, and Elite. So these are the 3 types of membership, right? Elite includes all of them. Robo Investor is just Robo Investor. Premium, it's Premium and Robo Investor. They're pretty similar, just different time horizon. Elite includes everything. Then if you don't need to have access to my live trading portfolio, I went over Active Trader in terms of how to use it. Similar, we have weekly trader and monthly trader, right? So if you're a tool subscriber, If you're tool subscriber, then you can have access to active trader, monthly trader, and weekly trader. Genevieve, I never use start. So the question is very good question. You know, do we use to exit the position? Do we use these levels, right? Do I assume that, you know, I go in and ATVI, I buy it for 85 cents and I sell it for $1.65? The answer is no. I personally use my trading plan. So some people want to look for 1%, then okay, you're looking for, in this example, 80 cents, so you look for 1% move. Some people look for 0.5%. Some people look for 2%. There's no right or wrong answer. The answer is the higher the return on capital, the lower probability of success. If you look for 1% profit on ATVI, you're looking for higher return on capital, but lower probability of success. If you look for 0.5%, 40 cents profit, you're going to get higher probability of success, lower return of capital. Depending on portfolio size, usually people tend to gravitate to lower return on capital, higher probability of success, because if you manage a large portfolio, 0.5% might be enough. If you're in a small portfolio, then you have to use for, you know, usually looking for higher return on capital, lower probability of success. But that's a very important concept that's actually worth mentioning. So I'm going to say this again, since this is a great question. There is no, the question is, you know, do you look for 1%, 2%, 5% for these short-term trades? For active trader, we do 1%. For weekly trader, we do 2%. For monthly trader, we do 5%. But that doesn't mean everybody has to do that. What usually the decision, I think the right way to approach this is to look at return on capital, right? Smaller portfolio will gravitate toward higher return on capital. You need to realize that looking at the bell-shaped distribution curve, right? The bigger the move you're looking in the stock, right? The bigger move you're looking for, the probability of success will continue to deteriorate, right? They are inversely correlated, and there is no you will not find, you know, you will not find a strategy where return on capital continues to go high and your probability of success continues to go higher. That is not, the world doesn't work like that, right? Statistic doesn't work like that. Stock market doesn't work like that. And unfortunately, subconsciously, it's a simple concept, but I don't think majority of the people think like that. You know, unless you remember your statistics classes, you don't think like that. But I think you need to retrain your views, right? Change your views. Always think, you know, every time you place a trade and you decide how much profit to make, there's no right or wrong answer. You know, this, you always have to think about bell-shaped distribution curve. You know, are you looking for the outlier events, or are you looking for, you know, one standard deviation move, right? And this will be dictated by portfolio size, where you are on the journey as a trader, and what your risk tolerance levels are. And there's no such thing as everybody's going to do it the same way. I don't believe in that. You know, portfolio size limits you on where you're going to be, right? Because I have this discussion with my nephews, and you know, they have $500 in their portfolio, they're trading options, and I'm telling them that's great, you can do it, but then you're limited by your choices, right? You're looking for large moves, and you have to time the market, and it's very difficult to time market precisely. But I understand you have $500, and you think of it as learning. So you buy an out of the money call. You know, I tell them you have to wait for spiders. You know, today buy it at 212, sell it at 317, with very little room for error. You have to time the market precisely, right? So they are looking for high return on capital, low probability of success trades. Doesn't mean it's not going to work, you know, because, you know, but you just need to make sure that you're managing your losing trades and successful trades correctly, right? That's going back to these 4 pillars of succession. After portfolio drawdown and probability of success versus return on capital, you need to manage your position entry. So if you structure your trade where, let's say, you're correct 30% of the time, then that winning trade, it means 1 out of 3 trades you're going to be successful. So, and 2 trades you're going to be unsuccessful. So then you need to make sure that that one trade that's successful, the profits will be more than the 2 unsuccessful trades. Right? So that's probably will conclude the strategy. In live trading room environment, I talk about these 4 rules, and it's easier said than done. You need trading journal. So trading journal is your last key to success. I strongly believe in trading journal. If you follow these 4 rules, eventually you will become more and more successful in trading. But just trading is like a business, and you have to treat it as such. Just because you have a business plan, that doesn't mean your company is going to succeed. You have to follow the business plan, and you have to have financial controllers. You have to have a board of directors to make sure that you are following the plan. And that's you can get a one-on-one coach, or you have a trading journal where you document your rules and you grade yourself on these rules. Yeah, if you're beginning to trade, my advice is write down your trading plan. Have these 4 rules, right? Decide how much cash you're going to have in your account, how many positions you're going to have at any given point, and what is your maximum loss on any given position. If it's an option trade, usually it's 50% stop loss, right? If it's stock trade, usually it's 10 to 15% stop loss. So you decide on these stop losses, and you decide understand what your portfolio drawdown should be at any given point. The third rule, if you follow Tradespoon, active trader, weekly trader, and monthly trader, the models were designed where the success rate is 75%. So every time you get in any of these trades, statistically, 3 out of 4 trades will be successful, because I'm looking for smaller return on capital, but I look for high probability of success. And then the 4th rule is to make sure that you basically are actually following your rules number 1, 2, and 3, making sure that you follow your stop levels, make sure you're looking for target gain, and making sure that 1 losing trade doesn't outweigh the 3 winning trades. All right, guys, thank you very much. Enjoy your weekend. Spend time with the friends and family. I hope to see everybody in the live trading room either today or Monday. And have a great weekend, and spend some time with the friends and family. Continue to exercise. At Yellow Tunnel, we always talk about emotional capital, right? To be successful in trading, you have to have enough sleep. You cannot be anxious. You cannot be fearful. You have to be. Your energy level has to be high, right? So that means yoga, running, reading a good book, breathing exercises, praying, but you have to be recharged. So use this weekend to fully recharge, and I will see you on Monday. Faust, thank you for your kind words. Joseph, Bob, Ricardo, Carmen, Genevieve, James, Divan, Trinath, Bob, Jamie, Shaniqua, Joseph, Bach, Randall, Marvin. Everybody, thank you very much. Bruce, and I will see you either today or Monday. Have a great weekend.